What does financial success look like to you? Is it $1 million in the bank, a comfortable retirement, or financial freedom? It's a question that stirs the imagination, yet the answer is as unique as our fingerprints. For some, financial success might be measured by a hefty bank balance. For others, it may mean the ability to retire comfortably at a young age, or perhaps it's the freedom to make choices without the constant worry of financial constraints. What's crucial to remember is that financial success isn't a one-size-fits-all concept. It's a personal journey, shaped by individual goals, aspirations, and circumstances. It's about defining what wealth and success mean to you, and chasing that vision with determination and strategy. Whether you're dreaming of that seven-figure bank account, yearning for a worry-free retirement, or striving for freedom to live life on your terms, it all starts with understanding your financial goals. And that, my friends, is the first step towards achieving financial success. Ready to define your financial goals? Let's get started on your path to financial success. Like, share, and subscribe for more wealth-building strategies. You've heard it before, a penny saved is a penny earned. But how does saving actually contribute to wealth building? Let's delve into the power of saving. At its core, saving is about preserving a portion of your income for future use. Think of it as a safety net, a cushion, or even a lifeboat that keeps you afloat during rough financial seas. It's the financial equivalent of storing acorns for the winter, a practice as old as time itself. One of the key principles of saving is the concept of paying oneself first. This means that before you pay your bills, buy groceries, or splurge on that shiny new gadget, you set aside a portion of your income for savings. It's like being your own employer, paying yourself for your hard work. Now you might be wondering, how much should I save? Well, financial gurus often suggest the 50-30-20 rule. 50% of your income should go to necessities, 30% towards wants, and a solid 20% right into your savings. But remember, these numbers aren't set in stone. Adjust them based on your income, lifestyle, and financial goals. A critical aspect of saving is building an emergency fund. This is a stash of money set aside to cover the financial surprises that life throws your way. It's your financial first aid kit, ready to patch up any unexpected expenses. Without an emergency fund, these surprises can lead you into debt, or worse, financial ruin. Experts recommend that your emergency fund should be able to cover 3 to 6 months' worth of living expenses. It provides a sense of financial security, knowing you can handle unexpected costs without resorting to borrowing. In the grand scheme of wealth building, saving might seem like a small step, but it's a step that can make the difference between living paycheck to paycheck and financial freedom. It's the foundation upon which you build your financial house. Without it, the entire structure could crumble. Remember, no amount is too small to save. The journey to financial success starts with that first penny saved. Now that we've started saving, it's time to put that money to work. Have you ever wondered how the rich get richer? Well, the secret lies in not just saving money, but investing it. Investing is all about making your money work for you. Instead of just letting your savings sit idle in a bank account, you put it into assets that have the potential to generate returns. This could be anything from stocks and bonds to real estate and small businesses. Now, let's talk about the magic of compound interest. Imagine you're planting a seed. This seed grows into a tree that bears fruit. Now, if you take those fruits and plant their seeds, you'll get even more trees. Over time, you could end up with a whole forest. That's exactly how compound interest works. Your money grows, and then the money you've made grows as well. Let's break it down further. Let's say you invest $100 and it grows by 10% every year. After the first year, you'll have $110. In the second year, you're not just earning interest on your initial $100, but also on the $10 you made in the first year. Over time, this growth can really add up, and the longer you leave your money invested, the more it compounds and multiplies. There are various avenues for investment. Stocks and bonds are popular choices. Stocks let you own a piece of a company and share in its profits, while bonds are essentially loans you give to companies or governments in return for regular interest payments. Real estate is another solid option, where you can earn money through rental income or by selling at a higher price in the future. Investing can seem complicated and risky, but with careful planning and a long-term strategy, it's a powerful way to multiply your wealth. Remember, the goal of investing isn't to get rich quick, but to steadily accumulate wealth over a long period of time. Investing isn't just for the rich, it's a wealth-building strategy that everyone can and should use. Debt, The word itself can be intimidating, but did you know not all debt is bad? Let's delve into this concept. Imagine debt as a tool. When used wisely, it can help you build wealth. This is what we call good debt. Good debt can be an investment that will grow in value or generate long-term income. Think of student loans, mortgages, or loans to start a business. These debts can potentially lead you to financial success. On the other hand, bad debt is usually the result of buying things that quickly lose their value and do not generate long-term income. Think about that high-interest credit card debt from your latest shopping spree. That's what we want to avoid. So, how does your credit score fit into all of this? Your credit score is like a financial report card, and lenders use it to determine your creditworthiness. A high credit score can open doors to good debt opportunities like lower interest rates on loans. Therefore, maintaining a good credit score is essential. Now let's talk about the balancing act. Balancing debt repayment with saving and investing can be a tricky business. You might think, why should I invest if I have debt? Well, the answer lies in the interest rates. If the interest rate on your debt is lower than the potential return on an investment, it might make sense to start investing while making regular debt payments. Here are a few strategies to manage and reduce debt. First, always pay your bills on time to avoid penalties. Second, try to pay more than the minimum payment on your debts. Third, consider debt consolidation to secure a lower interest rate. And last but not least, create a budget and stick to it. Managing debt effectively is crucial for building wealth. Remember, it's not about eliminating all debt, but about creating a balance. So keep these tips in mind and you'll be well on your way to achieving financial success. We've talked about saving, investing, and managing debt, but what about the future? How do we ensure our financial success in the long run? Well, the key word here is planning. Financial planning isn't just about the here and now. It's about charting a course for your financial journey, setting up a roadmap for where you want to be in the future. And that future could be 5, 10, even 50 years down the line. In this journey, you'll need to set long-term financial goals. These are your financial North Stars, guiding you towards your desired destination. Whether it's owning a home, sending kids to college, or enjoying a comfortable retirement, these goals should be specific, measurable, achievable, relevant, and time-bound. In other words, they should be SMART. Now, let's talk about retirement accounts. These are your financial safety nets for when you decide to hang up your boots. From 401(k)s to IRAs, these accounts allow you to grow your wealth tax-free over time. So the earlier you start contributing to these accounts, the more time your money has to grow. But what about life's unexpected hurdles? That's where insurance comes in. Insurance is a crucial part of any long-term financial plan, protecting you from financial ruin in the event of unforeseen circumstances. From health to home to auto insurance, it's all about mitigating risk and safeguarding your wealth. And let's not forget about emergency funds. These are your financial lifeboats, providing a cushion for unexpected expenses or financial hardships. A good rule of thumb is to have at least 3 to 6 months worth of living expenses in an easily accessible account. So, how do we plan for future financial needs and emergencies? It's all about being proactive, not reactive. Regularly review and adjust your financial plan, keep track of your spending, and always be on the lookout for ways to increase your income or reduce your expenses. Planning for the future may seem daunting, but it's an essential part of wealth building. Remember, financial success is a marathon, not a sprint. Building wealth isn't about getting rich quick. It's about making smart financial decisions and sticking to your plan. Let's recap what we've discussed. The journey to financial success begins with defining your financial goals. Clear goals give you a target to aim for and a roadmap to follow. The power of saving can never be underestimated. Every dollar saved is a step closer to your financial freedom. Then we talked about your wealth multiplier, investing. Investing wisely can exponentially grow your wealth over time. We also touched on the importance of managing debt. It's not about avoiding debt completely, but about using it strategically. Lastly, we discussed planning for the future. A solid financial plan takes into account both short-term needs and long-term goals. Remember, the path to financial success isn't always easy, but with the right strategies and a bit of determination, it's definitely achievable. So, are you ready to take control of your finances? Now that we've laid out the path, it's time to take the first step. Start by evaluating your current financial situation. Understand where your money comes from, where it goes, and how much is left at the end of the month. Next, create a realistic budget that aligns with your financial goals. Remember, a budget is not about restricting your spending, but about making conscious decisions on where your money goes. Start saving and investing, no matter how small the amount. Every journey begins with a single step, and most importantly, be patient and persistent. Financial success doesn't happen overnight. It's a marathon, not a sprint. Remember, you are in control. Your decisions today will shape your financial future. So, are you ready to take that first step? In our next video, we'll dive deeper into each of these steps, providing you with practical tips and advice to help you on your journey to financial success. Until then, keep learning, keep growing, and keep moving forward. Closing. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more financial advice. Your support helps us create more content like this. Thanks for watching, and remember, your path to financial success starts with you.